G'day everyone, we're back at it today with some more property chat. We've got Luke again.
Howdy.
You don't remember from Emerge Finance, he was with us last year. Thought we'd have him back. Market's changed a little bit from when we were chatting last time. I think we were probably chatting 6 months ago. You've seen a bit of change in that time?
Yeah, mate, as you've seen, there's not a lot of stock, heaps of competition.
Yes.
The year started off super hot. Plenty of buyers out there. We're getting lots of people pre-approved lined up, but they got nothing to buy.
Yeah, really. Yeah, I found that. Just like the listing level is so low. Like even got some people locally around here. The only reason they're using us is because there's no properties around. Hey,
Yeah,
crazy.
I'm seeing a lot of clients open to the idea of using buyer's agents, and I'm saying to them I can absolutely see the value in buyer's agents right now in this market. Obviously you can get access to the off markets, your pre-markets, and try and get ahead of the competition. Also, it's very hard to value things at the moment because of how fast it's moving. So spending over $1 million pretty easy to overspend.
Are you finding when people do go out and buy, are the bank valuations coming in okay? Like in that terms?
Not mate, touch wood, we haven't seen one.
There is it.
I'm trying to find wood here, but
chair leg.
Yeah. But yeah, I haven't seen a valuation come in short for 18 months at least. Yeah. So I think the valuers are understanding how quickly the market's moving. And obviously, factoring in that it is quite hot. Yes, there might not be some comparables there that are similar, but they understand the trajectory.
And in terms of like pricing, I mean, we saw in January, I think the market did another 1.6% growth, and it was 2% before that, and another 1.5% the month prior. Are you finding, or how are you finding your buyers are coping in the pretty fast moving environment in terms of pricing?
Yeah, it's challenging. It's challenging. That's for sure. So I guess just trying to stay persistent and positive, and realistic as well. Having more detailed conversations with my clients to obviously we work out what their borrowing capacity is, and then established where are you looking to buy, what sort of property you're looking at. Even jumping on the sold section realestate.com to see if it's even achievable. So we're having those longer conversations around that, so that I guess they're not wasting their time on something that may not be achievable for them, because the longer you wait, as you know, the market's just continuing to go, and you're going to find yourself getting priced out of different areas, having to go further out of Brisbane.
Are you finding when people come to you, some people are being a bit too optimistic with what they think they can borrow? You certainly see that a bit, but probably not as much now, I reckon, because of all the media stuff coming out and education. I think people are a little bit more educated now, a little bit. So they're starting to understand, the value of homes in Brisbane. It's been plastered all over the media. They're aware that borrowing capacity can be a challenge. There are ones that have got unrealistic expectations, but they quickly get brought back down to earth once we have a chat and work out what their borrowing capacity is. Because I think the biggest thing I've found, and I'm sure it's good having someone like you on my side, because when people come to us, maybe they've already got one property, maybe they've got one investment, and they think, okay, let's go buy another investment because they have so much equity in their house. They're looking at their property. It's gone up 300k in 2 years, which is nuts. But then when they try to go something, they actually can't service the loan. I think that's been the biggest thing. Hey, I don't know.
We see that a lot. People say, "Oh, look, I've got all this equity. Why can't I do what I want to do?" It's it's all income driven. So yes, you need equity to be able to support it, equity or cash deposit. But if you don't have the borrowing capacity, well then it's not going to happen. A lot of people that are in that case where they want to upgrade, they're finding that they're having to sell. And that can be a challenging one to navigate. So, if you can qualify for a bridging loan, that's a really good solution. Allows you to buy the next property without having sold your previous one yet. But a lot of people don't have that ability to do the bridging because they want to go from say like a $750,000 townhouse and wanting to buy up to 1.2. Unless they've got a significant cash deposit or heaps of equity, it's a really challenging thing to go up a price bracket with the bridging loan. So then we're seeing things like subject to sale clauses, excuse me, which isn't all that attractive. So then you're putting your house on the market, doing a 90-day settlement and trying to line up the purchase, and perhaps settling on a property that might not be suitable. Yeah.
Yeah, it's pretty hard to negotiate those sometimes. It can work. I think in a slightly less heated market, it's good.
Yeah.
But I think the problem is, when you go in with the subject to sale, it can sort of kill you, because even if you've got a good price, an owner would probably take a lower price with someone with more certainty that they will buy their house than someone with the subject to sale. Hey.
Yes.
So it's a pretty tricky market. But I mean, I know interest rates are probably a big talk at the moment, with rates going up, and
I'm getting the crystal ball back out.
Yeah, where's the crystal ball, mate? I know we would all make a lot more money if we had one. And I know people have lots of thoughts, and it gets pretty hyped up in the media and social media. In case you didn't know, interest rates went up 0.25%. If
the RBA met on Tuesday.
If you didn't see it on another 15 mortgage broker pages.
I put my hand up. I didn't even go anywhere near it.
Oh, I didn't even.
So I left it to the others.
Check that. But are you going to see, do you think that's going to have a big impact on the way things happening? Will it actually cool down the market, or what's sort of your perspective?
My thoughts are it won't.
Yeah, okay.
Not this initial one anyway. People might take stock, and for those that have already got mortgages, they're having a look now at what they're paying and whether or not that's competitive. It's always a talking point when you see rate rise. So I think the market will still be quite hot here, in my opinion. 0.25. People still got heaps of money to spend, is what I'm finding.
Yes.
They're getting cash gifts from parents, for example, like the first home buyers, the bank of mum and dad stepping in to help bridge the gap. For those that are out there shopping right now, we've seen a 0.25% rate rise, which the banks will start to implement that over the next week or two, and your borrowing capacity will shift slightly down. So just be wary of that if you're out there shopping.
Yeah. And I don't know if you know this off the top of your head, but if, say, someone did have, let's call it $1 million to spend, rates go up 0.25, do you know how much that would reduce their borrowing capacity by?
Oh, it's a good question. Something I wouldn't, best to check with your broker, but could be, 30, 40 grand potentially. So, depending on, your situation.
Yeah. I think like you're saying, I think it could take a little bit of heat out the market. The word.
Yep.
But I don't think overall it's going to slow down. I think people might reassess and think, oh, hey, what's going on? But once they see 10, 15 buyers back at it this Saturday with not much really changing, it's not going to slow down.
But people still need homes, roofs over their heads.
Always.
There's still a lot of people, still looking, and they'll continue to do so.
Yes, exactly. And I know you're pretty big on. Bank of mum and dad, like you just mentioned, guarantor loans, that sort of thing. Are you seeing obviously quite a bit of that at the moment?
Heaps.
Heaps. Talk us through that.
I think parents, I'm having a lot of conversations because we're doing a lot of guarantor loans. So I talk to the parents that are involved, or even sisters or brothers can help as a guarantor too, by the way. I'm talking to them, and they're realising that the market is getting out of reach for a lot of people. So they're realistic, and they want to do what they can to help their kids get into the market. So whether that be they go guarantor, so basically they put their house up as security to help secure the kids' property, so you don't pay lender's mortgage insurance, you need a smaller deposit, you could get away with zero deposits theoretically, $0, sorry. The other option is parents are gifting money. So, I know not everyone's fortunate enough to have that ability, and I certainly wasn't. But there's a lot of people that are getting these gifts from parents to help bridge the gap between what they can borrow and what they need to get into the market. I don't know, for probably a lot of mums and dads, they hear the word guarantor and maybe they're not too keen or this and that. What are sort of those probably maybe misconceptions around the guarantor loans? Ones I hear is that, we're going to be on this loan tied to the kids forever, and I'm going to lose my house, or all that sort of stuff. Yes, there's some risk involved. With most of the banks, you'll have a limited guarantee put on your property, and so all else fail. Kids default on their mortgage, the lender sells the property, they don't get what's owed to them, the lender can go after the guarantor up to what you've guaranteed up to. So that's sort of how it works. But I think it's, with us, we're reviewing loans every 6 months. With the way that the market's going, capital growth's moving quite quickly. So the ones that we've had as guarantors, the parents aren't on there for very long, because every review we're doing, we're getting a valuation done. And once we know that there's 20% equity, we kick the parents off.
Right, yeah, and then they're good to go, sort of thing.
Yeah.
Right,
yeah. So in this market, it's working really well. It's not going to be a market like this forever, so that's the thing that you need to factor in.
Yes.
But yeah, great option. You'll get a cheaper interest rate, don't have to pay lender's mortgage insurance, don't need to have as much of a deposit. As long as you've got the borrowing capacity to support the loan,
yes.
Happy days.
Yeah. I think that's the thing, like sometimes you just sort of have to do it, you have to do to get into the market as well. Like if you are, you know, if you look at the trade-off between saving up for 5 years, trying to get that 20% deposit, if you don't want to use like a 5% scheme or something like that, it's going to take you a lot longer than if you can get a bit of help from mum and dad if they're in the financial position to be able to do so. And like you're saying, really the market's moving so fast that you can hopefully get them off the guarantor loan within maybe 12 months or 15 months. And you've got no price cap with the guarantor. Like you're limited by your borrowing capacity. So if you're a higher income earner, and your partner is as well, for example, you could borrow 1.5, for example, and you might only have 10 grand in the bank, but with a guarantor, you potentially have a crack at that level of a property. So that's a real benefit. What I'm seeing as well is kids living at home with parents not paying any rent or board. It's a really good scenario where happy living there. It's all friendly with mum and dad, and they're happy to have you around for a few more years. Is they're actually buying an investment property, so they're rent vesting, but they're not really paying rent. They're just smooching off mum and dad essentially. And then we got the rental income on the new property, plus the investment loan, the tax deductibility. It works really favourably for borrowing capacity. So people that are single income earners that don't potentially have enough income to buy a house to live in Brisbane, using a 5% scheme. If we look at that scenario, using a guarantor, rent vesting, your borrowing capacity is significantly more. Right, okay.
So that's how I'm helping people that are single income earners get into the market, is looking at that option. Are you finding that more and more, like even rent vesting in general, even people with lower, who might have, say a $300, $400, $500 payment per week wherever they're living, instead of going out and buying a first house and living in it, are there more rent vestors? I know I was running through a situation the other day, just looking at a client who came to me. They were, had a budget of $850 in the area they wanted to buy. They couldn't afford a house there, right? But they only wanted a house. And for me, I literally ran the numbers with them and I said, look, for one, you actually can't, you're not going to be able to get into a house with this budget in this area. But what you can do is pay the same rent you're paying now in that area, and then actually use your budget to go buy an investment property elsewhere. And you're actually going to be paying less than if, even in theory, you could afford it. You're going to be, you would be paying a higher mortgage repayment each week than doing the whole rent vesting situation. It could be a really favourable way to get on the ladder, have it for a few years, and then maybe sell it and buy a place to live in then. When you've got perhaps more income, you've had a promotion, you got more borrowing capacity, plus you got the growth from that investment property to put down as a deposit. So really good way if you're in a good spot like that. The other thing that people don't know about guarantor loans is it's not just for first home buyers, people living in the property. It can be for investment as well, and also it's not just for first home buyers. If you've owned property before, you can still use them. Right. Okay. It doesn't have to be your first house essentially. Okay. And so there's a guarantor loan. Obviously, that one's working well. Are you finding a lot of people are using the new updated 5% deposit scheme as well? Heaps of them. So as you would know, like that price between 700 and 1 mil has just gone nuts. We've seen a huge uplift in growth as a result of it from October 1 when the new scheme cap came in. Heaps of clients looking to get pre-approved under that scheme. There's some good options there in terms of the lenders. Ones that have got quick turnaround times, which is important because quick turnaround times can win deals. Tight finance clauses. Seen lots of that. The other thing that we're seeing, one of the lenders that we've got on our panel will go up to 90% lend, so 10% deposit, no LMI. So that's for own occupied and investment. Typically, there's 90% LVR, no LMIs for like your doctors and your physios and medico sort of waiver, LMI waivers, but it's available to anyone. Right. Okay. So we're using that policy quite a bit at the moment. Right. Okay. And that's with will you pay, like, I know a lot of people talk about interest rates as well.
Would that be with a slightly higher interest rate?
Yes.
Yeah. Okay.
Yeah. So it'll be a loaded interest rate, but obviously, as you're paying the loan down, property goes up in value. We get it repriced.
Yes.
And then the idea is that you're not paying that high rate for too long.
Yeah.
Yeah. I've just done a scenario for a client looking to buy up to 1.4 it was. The LMI that they're saving is about 30 grand.
Wow.
So obviously that 30 grand would be dead money to them if they've gone and did like an LMI loan. Yes. Versus them paying the slightly higher rate for maybe 12 months, 6 to 12 months, get them repriced, and they'll be at like a rate as if they had a 20% deposit.
Yeah, I think that's the key there is I get a lot of people, and probably you do more in your field, who just want the cheapest rate. They don't look at anything else or the policy or inclusions like not paying any LMI.
Yes.
But it's like you have to actually look at the bigger picture and think, yeah, sure, I'm paying slightly higher interest rate, but you're getting a lot more capital gains in the long run, and you're getting into the market, right? So,
yep. Lenders are starting to make some changes around HEX debts as well. So if you've got a HEX debt, and it could be paid off within the next 12 months, some lenders that will exclude that now in borrowing capacity, which can make a big difference, especially if you're a high income earner.
Yeah, okay.
Yeah.
Yeah, that's cool. And so for buyers out there, first home buyers, maybe they're looking to buy their first house, or investors, what's sort of your biggest piece of advice, or what would you say to someone who's trying to start their property journey tomorrow?
Yeah, have a chat with the mortgage broker specifically, and work out what your options are. Work out your borrowing capacity. Then you can then you're not guessing. If you need to save a little bit more, they can guide you on how much you need to save. Then you know exactly what that is, and you can start aiming towards it. If you're just aimlessly saving, you're not really going to get there as fast as if you knew what you were having to save. Have a chat early, get across your numbers. Even if you're not ready right now, it's still beneficial to have that chat and get yourself lined up.
Yeah, nice. And what do you think? Again, get the crystal ball out, mate. What do you think the rest of 2026 holds? Are we in for a good year, you think?
Yeah, well, what are they predicting in terms of growth in Brisbane? Like double figures?
I think so.
Yeah,
a lot of people are double figures.
I wouldn't mind betting that that's the case. I think much the same as last year. Don't know whether we'll see any more stock. Hopefully, maybe with a couple of the rate rises, there might be some more stock. I think like the lenders are starting to make some changes around helping first home buyers, which is great to see. Obviously, we saw the 90% no LMI, which I spoke about, 5% scheme caps lifted, HEX debt changes. So they're all little tweaks that are helping first home buyers. So if I was a first home buyer sitting out there watching this, I'd be seriously considering getting myself lined up sooner rather than later. Because you can't save as fast as this market's moving.
Awesome. Well, you heard it here first. If you're looking to buy your first house or investment property, go have a chat to Luke. He'll sort you out, and if you need a hand in the market, we'll help you buy it.
Cheers, guys.